Welcome to our channel. Today we're diving into the exciting world of investing for beginners, focusing specifically on the importance of reading trading charts. In this video, we'll cover the basics of trading charts, how to interpret them, and the key indicators that can guide your investment decisions. Understanding these charts is crucial for successful investing, as they provide valuable insights into market trends and price movements. By mastering chart reading skills, you'll gain the confidence to make informed decisions, minimize risks, and potentially increase your returns. So, whether you're just starting out or looking to sharpen your skills, stick around to unlock the secrets of trading charts and elevate your investing game. In the world of trading, there are three primary types of charts: line charts, bar charts, and candlestick charts. Line charts are the simplest, displaying price movements over time with a single line, making them great for spotting trends at a glance. However, they lack detailed information about price fluctuations. Bar charts offer more insight, showing open, high, low, and close prices for each time period, which is useful for understanding market volatility. Candlestick charts take it a step further, visually representing price movements with candles that indicate bullish or bearish trends. They're particularly effective for identifying patterns. Use line charts for quick overviews, bar charts for detailed analysis, and candlestick charts for in-depth trading strategies. Each has its unique strengths. To effectively read trading charts, it's essential to understand key components: price, volume, and time frames. Price is the most critical element, representing the value of an asset at any given moment. Volume indicates the number of shares or contracts traded, providing insight into market activity and liquidity. Higher volume often signals stronger trends. Time frames, such as daily, weekly, or monthly, help you analyze price movements over different periods, allowing for both short-term and long-term strategies. For example, a daily chart can reveal immediate trends, while a weekly chart offers a broader perspective. By interpreting these components together, you can make informed decisions, spotting potential entry and exit points. Visual examples of each component will enhance your understanding. Candlestick patterns are vital tools for traders, providing insights into market sentiment and potential price movements. Each candlestick consists of a body and wicks, where the body represents the opening and closing prices, while the wicks show the highest and lowest prices during that period. Common patterns include the doji, which indicates indecision in the market, the hammer, signaling a potential reversal after a downtrend, and the engulfing pattern, suggesting a strong shift in momentum. To effectively use these patterns in your trading strategies, look for confirmation with other indicators, such as volume or trend lines. By mastering candlestick patterns, you can enhance your ability to predict market movements and make more informed trading decisions. Support and resistance levels are crucial concepts in trading charts that help traders make informed decisions. Support refers to a price level where an asset tends to stop falling and may bounce back up, while resistance is where the price struggles to rise further, often reversing direction. Identifying these levels involves looking for historical price points where the asset has repeatedly reversed. For example, if a stock has bounced off $50 multiple times, that's a strong support level. Traders use these levels to set entry and exit points. They might buy near support and sell near resistance. Additionally, a break through these levels can signal potential trend changes, making them essential for effective trading strategies. Analyzing trends is essential for successful trading, as it helps you understand market direction. There are three main types of trends: upward, downward, and sideways. An upward trend features higher highs and higher lows, indicating bullish sentiment, while a downward trend shows lower highs and lower lows, signaling bearish conditions. Sideways trends occur when prices move within a range, reflecting market indecision. To analyze these trends effectively, traders often use tools like trend lines, which connect significant highs or lows, and moving averages, which smooth out price data to identify the overall direction. For example, if a stock is in an upward trend, traders might look for buying opportunities, while a downward trend may prompt selling or shorting strategies. Understanding trends can significantly influence your trading decisions. Technical indicators are powerful tools that can enhance your trading strategies. By providing additional insights into market conditions, the Relative Strength Index, RSI, measures the speed and change of price movements, helping traders identify overbought or oversold conditions. The Moving Average Convergence Divergence, nkathurac, tracks momentum by comparing two moving averages, signaling potential buy or sell opportunities when they cross. Bollinger Bands consist of a moving average and two standard deviation lines, indicating volatility and potential price reversals. For instance, if the RSI shows an overbought condition above 70, it may suggest a price correction is imminent. Similarly, if the price touches the upper Bollinger Band, it could signal a potential sell. By incorporating these indicators, traders can make more informed decisions in real-time scenarios. Now that you've learned the fundamentals of reading trading charts, it's time to put that knowledge into practice. Platforms like TradingView and thinkorswim offer excellent tools for chart analysis, allowing you to explore various assets and time frames. Start by analyzing historical data to identify past trends and patterns, then compare them with current market conditions. A simple exercise is to select a stock or cryptocurrency and draw trend lines, identify support and resistance levels, and spot any candlestick patterns. Additionally, use indicators like RSI or MACD to assess momentum. By regularly practicing with real examples, you'll build confidence and improve your chart reading skills, ultimately enhancing your trading strategies. Happy charting! In today's video, we explored the vital role of understanding trading charts for investors. We discussed various chart types, key components like price and volume, and the significance of support and resistance levels. We also delved into trend analysis and the use of popular technical indicators like RSI, nkathurac, and Bollinger Bands. Remember, mastering these concepts can significantly enhance your trading strategies and decision-making. If you found this information valuable, please subscribe to our channel, like this video, and share it with fellow investors. Your engagement helps us create more content to support your trading journey. Thank you for watching, and we look forward to seeing you in our next video. Happy trading!